The risk aversion that crept back into the minds of investors on Friday continued on Monday in US share markets. The sensitivity that the market has shown to the news that Obama's administration may let GM go bankrupt reinforces the view that markets are in for a wobbly ride in the coming months. The US government has given GM enough aid to restructure over the next 60 days, while Chrysler will receive up to $6 billion and 30 days to complete an alliance with Italian automaker Fiat. Both companies have been told to step up their game if they are to continue to receive taxpayer funds going forward. GM was down over 30% in early trading and may go lower if they can't show some positive signs quickly. Some of the major markets were down over 4% on Monday trading. We could be in for a bumpy ride this week, already shown by the up and down markets. More unsettling news came from the US Treasury chief over the weekend. The Treasury are doing a stress test on the banks at the moment to see how they are faring. However, while on TV, he said that some banks were going to need some fairly extensive amounts of cash injected into them. Many have already received a lot of cash, and news was turning positive after Citigroup and Bank of America announced that they had made money in the first 2 months of this year. Our dollar followed the risk-averse trend, trading lower against the US dollar to just over 56 cents. In our local economy, building consents data out yesterday showed the continued lower number of building consents approved. It suggests that levels are now so low that we may be faced with a housing shortage in coming years, given the growing population. Although it is easy to understand the reason behind little building, given the lull in the housing market. The smiles are still on the faces of sheep farmers at present, with local schedule prices showing gains this week despite the gaining New Zealand dollar. All indications are that overseas demand is still strong, following lower supplies from the EU and UK. There is every chance that meat companies are being forced to compete for supply here at home in order to just get lambs through the door, while store lamb prices keep getting stronger. While there doesn't seem to be any indications of a quick downward spiral for lamb prices, any opportunity to take risk out of the equation should be considered upon its merits, given the volatility around the world. Longer term, easing global supplies are likely to keep global lamb markets tight, which should help to hold prices.